Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Good evening. Today we will be covering June 4th week banking and finance awareness news. Moving to the first news. The first news is about the revision of the priority sector lending norms for the small finance bank. Okay. So what is PSL? You know that RBI has instructed that the banks, they have to keep aside a certain percentage of their loan portfolio. Okay. Of their loans to the priority sector lending sectors. Okay. What does this mean? Priority sector means it is like the sectors like agriculture, their MSME, renewable energy, social infrastructure, which these sectors are very important for the overall development of the economy. So previously what happened was that enough amount of bank funds were not flowing into these sectors. So in order to ensure that adequate amount of the bank funds flow into these sectors, RBI introduced this priority sector lending norms. Okay. So RBI tells the banks that out of your entire loan, at least 40% or at least 30% you have to provide to these sectors. It is compulsory and they have to abide by it. Okay. So now what happened is, now RBI has reduced the amount of money that is flowing from the small finance bank to these sectors. So this has reduced the overall percentage. So how much has it reduced? It has reduced by 15%. So reduced by 15%, and this is effective from April 1st, 2025, which means that it is already effective. So previously, if you see the small finance bank, out of the total loan portfolio, 75% should be of priority sector lending and the remaining 25% can be of any other loans. Okay. Now this has been reduced to 60%. Okay. From 75%, this has been reduced to 60%. In that, if you see, out of the 75%, if you see 40% should be given to specific subsectors defined under the priority sector lending guidelines. So if you see, say suppose the total loan portfolio is 100 crores. Okay. So 40 crores some other loans. 75 crores should be for the priority sector lending. In that 75 also there is a bifurcation. So in that 75 crores, 40 crores should be as per the specific subsectors defined under this guidelines. So RBI has defined that for agriculture, at least 18% should be given. And for micro enterprises, at least 7.5%. Then to weaker section, at least 12%. So these sub-targets, overall targets should also be achieved and the sub-targets should also be achieved. So out of the 75%, 40% they have sub-targets that has to be complied. Okay. And the remaining 35% they can give it to any priority sector lending subsector. That is their wish. So whichever has a competitive advantage, which means that if the small finance bank thinks that if I give it to this priority sector lending part, then I might earn more income, I might earn more interest, then they can give it. It is up to their wish. Okay. So 40% there is a sub target, but for the remaining 35%, it is the small finance bank wishes. They can lend it whenever to whichever sector they want under the priority sector lending. Okay. Now this 75% has been reduced to 60%. So 40% remains the same. They have to fulfill the sub targets. Remaining 20%. So this 35% has now been reduced to 20%. So this remaining 20% they can give loan to any PSL subsector. Okay. This is what has been done. 75% reduced to 60%. The overall 40% should still be maintained, should still be achieved. The reduction here is from the 35% to the 20%. Remember this, it is very, very important. Next is SEBI eases compliance norms for the foreign portfolio investors investing in the government securities. So FPI, I am sure you would have heard, right? What is FPI? So here if you see the foreign investors who wants to invest in Indian securities and all, Indian bonds, okay, but they don't want to register themselves with the Indian governments, okay, with the Indian regulatory bodies. They don't want to register because they think it is very huge procedure around. So they can invest in the Indian securities, Indian bonds via the foreign portfolio investors. The FPIs will register with the Indian regulators, and here the foreign investors, they will give money to the FPIs. FPIs in turn invest the foreign investors' money in the Indian bonds or securities. Okay, this is how the FPI works. So recently the 210th board meeting of the SEBI took place. So in that, if you see they had relaxed certain norms for the portfolio for the foreign portfolio investors who invest solely in the Indian government securities. So this relaxation, if you see, it is only for those foreign portfolio investors who invest only in the government securities. That is, the entire money of this FPI invest only in the government securities. For them, this relaxation was introduced. If you see, generally, the foreign investors, they can invest via three routes. First route is the general route. Here, the foreign investors can invest in the Indian debt within the RBI prescribed limit and condition. Second is the voluntary retention route. So this is kind of little bit long-term investment where they have to maintain their investment at least for 3 years. Okay, a 3-year retention commitment should be given by them, and they have to hold that the bonds or the securities at least for 3 years. The last one is fully accessible route. Here, the permits unrestricted investment by the foreign investors in specified government securities. So in specified government securities, you can invest how much ever you want. There is no any limit. Okay, so these are the three routes via which the foreign investors invest their money. So here we saw that the relaxation is only for those FPIs which invest their money only in the government securities. Remember this point, it is very, very important, not for the any other FPIs. So what relaxation has been given? First is that government security FPIs, they will have less frequent mandatory KYC reviews. Okay, so now the KYC, that is know your customer review updation. Okay, once you have created, it is not that you don't have to update it, right? You have to update. Just like in banks, when you submit your KYC, the banks again ask for your KYC after 3 or 4 years, right? So a KYC updation should be done on a regular basis. But the tenure, whether once in 3 years or once in 5 years, that tenure has been reduced now. Okay, why? Because that frequency has been reduced now because government security, right? So less riskier. So why don't we make it easy or less complaint or a relaxation should be provided. For that purpose, this has been done. Second is that existing and prospective FPIs that exclusively invest in government securities under this route, okay, FAR route, shall not be required to furnish investor group details. Investor, I told you, right? Foreign investors, they register themselves with the FPI and the FPI will invest in our government securities. Okay, so here if you see, FPIs, they have to generally, in case of other FPIs, they have to furnish the foreign investors details to the Indian government. But here, with respect to the government securities, they don't have to furnish the investor group details. You don't have to provide the investor group details if the FPI is only investing in the government security. Next, NRA, that is non-resident Indian OCI, they are also permitted to invest in this government security FPIs. Okay. In other FPIs, there is a limit. Maybe out of the total FPI, only 10% should be invested by the NRA, OCI and all. But here, in case of government security FPI, there is no limit. Okay. That is, shall be permitted to constituents of government security FPIs without any restrictions applicable to other FPIs. So, in other FPIs, there are certain restrictions for the NRI and OCI, but here in case of government security FPIs, there is no restriction at all. Okay. So, these are the various regulatory complaints that has been eased for the FPIs investing in the government securities. So, next is SEBI set a uniform 30-day window for reporting all material changes. Okay, if there is any changes related to the investors that has to be informed to the SEBI. Previously, if you see, there was a window that varies from 7 to 30 days. So, between 7 to 13 days depending upon the type of change, whether it is very serious change, very important, less important change, depending upon that change, the reporting window was between 7 to 30 days. Okay, but now it has been uniform. Okay, irrespective of whatever the change is, you have 30 days. You have to report that change within 30 days to the SEBI. So, why was this relaxation what? If you see, the above relaxation came at a time when FPI investment in the FAR eligible securities has been significant increase and crossed 3 lakh crore. The volume has increased tremendously. Okay, so if you see, that is why they thought it has been increased tremendously, and this is also in government securities only. So, why can't we reduce the compliances? Why can't we ease certain relaxations? That is why this has been introduced. Okay, I hope you have understood what relaxations have been what and to which type of FPI. Next is SEBI clears co-investment framework for the category 1 and category 2 AIF, alternate investment fund. So, now SEBI allowed category 1 and category 2 AIF to offer co-investment opportunities within the AIF structure. So, what is co-investment? Co-investment means investors put in extra money directly into a company where the main fund is already investing. So, this is done separately from the main fund. So, earlier co-investment had to be done only through the portfolio management services, a separate and an often complex structure. So, let me explain what is co-investment framework and how it was done previously and now what change has been done now. Okay, I will explain this with an example. Now, take an example, there is an alternate investment fund A. Okay, so Mr. Rahul is already an investor who is investing in this alternate investment fund A. So, what is alternate investment fund? It is similar to mutual fund, but mutual fund is the risk there is lesser. Alternate investment fund, if you see, the risk here is higher. Okay. So, here alternate investment, what they do, they in this alternate investment fund A, they are investing in companies E, F, G, H. Okay, these 4 companies they are investing. Okay. So, and if you see the range, the shareholding, if you see 25% of the fund goes here, 25% here, 25% here. Okay, how much of a fund enters, suppose Rahul is investing, say for an example I am telling, 1000 rupees in this alternate investment fund A. Generally it is more only, 1000 rupees and all, it is not acceptable, it will be only in lakhs, but just for an example I am telling. Okay, say suppose Rahul is investing alternate in 1000 rupees in this alternate investment fund A. So, now if you see 250 will go to this, 250 to F, 250 to G and 250 to H. So, this is how all the money will be separately invested in these stocks. Okay. Now, Rahul finds that he finds this F and H stocks interesting. He thinks that I want to invest more only in these F and H stocks. Okay. So, now if you see previously, if he wants to invest only in this F and H stock, he used to go to a portfolio management service. Okay. He used to go to a portfolio management service. He used to tell that I want to invest in this F and H stock, and this portfolio management service will invest Rahul's money in this F and H stock. Okay. So, PMS, this is what is co-investment. Co-investment means you are investing in that stock via the alternate investment fund and also solely also. Okay. Now, you might be wondering, the stocks can be bought in the stock exchange itself, right? So, here if you want to buy Tata stock, you go to the stock exchange, Reliance stock, you go to the stock exchange, okay, Titan stock, you go to the stock exchange. So, why is Rahul going to the portfolio management service to buy this F and H stock? It is because mostly under the alternate investment fund, the companies that they invest, they are like startups and all, early stage ventures which are not listed. Okay, they are mostly the unlisted companies, so they are not available in the stock exchange itself. Then how can Rahul buy from the stock exchange? It is not possible, right? So here, if you see, he used to go via PMS. What happens is that this alternate fund cannot be a PMS until and unless this alternate fund manager or the fund manager has the PMS service license. See, PMS license is separate from alternate investment fund license. Okay, they should have a separate license. They should create a separate license, PMS license, and then only they can provide that service. So if you see Rahul, he wants to invest, but now he has to go for he has to go and search for a PMS. He has to register himself, again provide all the details, and then only he can invest. This was little tedious. Okay, now the SEBI has made it even more simpler. Now SEBI has told that this alternate investment fund itself, it under this category, under this alternate investment fund, it can create a vehicle called co-investment vehicle. Okay, it can create a vehicle called co-investment vehicle, and now Rahul can invest the fund in F stock via this co-investment vehicle. Okay, so how many ever stocks it want to invest, those many co-investment vehicles should be created. Co-investment vehicle is nothing but a scheme. Okay, don't confuse much. It is just a scheme under this alternate investment fund which is created to co-invest in that separate stocks. Say suppose I told you, right, that Rahul wants to invest in stock F and stock H. So one co-investment vehicle has been created to invest in stock F. Similarly, alternate investment fund will create another co-investment vehicle to invest in stock H. So this is what co-investment means, and this is the new change. So you don't have alternate investment fund using the existing licenses. So they can create this co-investment vehicle, okay, which is nothing but just a scheme. So that through that co-investment vehicle, Rahul can invest the money in that particular stock. So for each stock, a separate co-investment vehicle has to be created. Okay, now this PMS license, now if they want, they can invest via PMS, or they have this option also. This option, co-investment vehicle, is easier option because Rahul has already registered himself with this alternate investment fund. So he doesn't have to register once again, right? So this is an easier option both for the alternate investment fund manager and for also Rahul. Okay, this is what is the new change that has been brought. Previously, they had to co-invest only via the portfolio management service, but now they have an option to invest via the co-investment vehicles, which is very easy for the investor. So SEBI now allows the alternate investment fund manager to offer co-investment through a co-investment vehicle, a simpler method. So allowing existing investors of an AIF invest directly in the unlisted companies that the AIF is also investing in. So a new CIV scheme must be launched for each co-investment opportunity. That is one company, one CIV scheme that I just explained in the previous slide. So co-investment through CIVs is only for the accredited investors, not for all investors. Remember, because all these are unlisted. So here if you see, the risk is very high. So this investment is only for the accredited investors. Next is RBI's updated project finance norms to take effect from 1st October 2025. So RBI has recently released RBI Project Finance Direction 2025. So in that, if you see, it has changed the provision for various infrastructure projects, for various commercial projects and all. The provision amount that the banks have to maintain, that has been released. Previously, if you see, they had released a draft. Okay, in that draft, the provision norms were higher. Okay, the percentage of provision that the banks had to keep aside, it was higher. Now the Reserve Bank of India has released the latest and the final directions. In that, the provisions has been reduced, and this will be effective from 1st October 2025. Now let us look into the general provisions. Okay, general provisions, this is during the construction phase. Whenever a commercial real estate has been under the construction phase, that time a general provision has to be kept aside by the banks. The percentage, if you see, 1.25% of the commercial real estate exposure. If it is a commercial real estate residential housing, then it is 1%, and also for the other portfolios also. Okay, remember, for the commercial real estate exposure, it is 1.25%. If it is a residential housing, it is 1%. This is during the construction phase. Next, during the operational phase. Okay, that is, the construction has been completed and now it has started to operate. In that, if you see, the risk is little lesser, right? That is why the provision amount is also little lesser. So here, if you see, it is 1% for the real estate. For the residential housing, it is 0.75%, and for the other project, it is 0.4%. So previously in the draft, what happened was, During the construction phase, the provision was 5%, and during the operation phase, the construction was 2.5%. This huge, the provisions were there. Okay, but now it has been drastically reduced. These are the latest provisions. Remember them, and also the phase. The previous one we saw was in the construction phase. Now this is in the operational phase. Okay. Now is commencement of commercial operation is delayed beyond the originally scheduled date. Say suppose the commencement of operation should have been started by 2020, but it got really delayed by 1 year. That is by 2021 only the commencement happened. That is the operation started happen. During that period, if you see, the provision amount should be even more. Okay, when there is a delay in the commercial operation, then if you see, the provision will be extra provision has to be made by the banks. So if it is an infrastructure project, extra 0.375% per quarter. And in case of other, that is non-infrastructure projects, it is little more higher, that is 0.5625% per quarter. Remember this, it is very important. That is, you have promised the bank that you will start your operation by 2020, but this has been increased by 1 more year. So then per quarter, this is the extra provision. Apart from the already existing provision that we just discussed, this extra provision should also be done by the banks because there has been delay in the start of the operation. Okay. And next is that how many years of delay is accepted. Okay, because infrastructure projects and all, of course there will be some delays, right? But how many years, up to how many years a delay is accepted? So if you see in case of infrastructure, up to 3 years from the original commencement of operation, and in case of non-infrastructure projects, up to 2 years. Okay, remember maximum extension allowed is 3 years for infrastructure, and non-infrastructure it is 2 years. This is a very important news. You have to remember the percentage for each phase and also the delay acceptable. Okay, remember this also, the extra provision that the banks have to maintain in case of any delay. Please remember, it is very important. Next is RBI extends call money market timing by 2 hours, and this is from July 1st, 2025. So if you see, the Reserve Bank of India increased the interbank call money market timing by 2 hours. So this again I am telling you, this is effective from July 1st, 2025. So previously if you see, the timing was 9 AM to 5 PM. Now it has been increased to 9 AM to 7 PM. Okay. Now what is this interbank call money market? So from the name you can say that this call money market is an instrument that is being used by the banks alone. Okay. If the banks, if they think that they have less funds for today, okay, then they can borrow money from other banks. So banks can lend and borrow money from the other banks in the interbank call money market. This is only for 1 day. Okay, this is a short-term borrowing that is only for 1 day, and main thing here is that no collateral is required. So you can borrow the money. Without collateral. Okay. So this has been increased by 2 hours. Next, if you see, similarly, it has revised the close timing for the market repo and tri-party repo transaction that used to end by 2:30 to 3 PM, that has been increased to 4 PM. And this is effective from August 1st, 2025. Okay. First one, interbank call money market, that will be effective from 1st July. Here, this market repo and tri-party repo, it will be effective from 1st August. Remember the date also, because sometimes they will ask you from which date this is effective, this change is effective. So I am telling you, please remember it. Okay. Now what is this market repo? Okay, this market repo, it is different from the repo operation that is provided by the Reserve Bank of India. I am sure you are aware about the repo operation provided by the Reserve Bank of India, right? This market repo here, if you see, in case of the repo operation that is provided by the Reserve Bank of India, only the banks can participate. But in this market repo, who all can participate? Obviously, the banks can participate, the financial institutions, the NBFC, the mutual funds, insurance company, all these can participate in the market repo. Market repo is also a short-term funding. Okay, short-term borrowing. Okay, market repo, it is also a short-term borrowing. Here, a collateral is required. So you provide the collateral and another market participant provides you the fund. Okay, this is what is called market repo. Your market repo, it is also a short-term borrowing, but a collateral is required. A government security or some other collateral is required. That is provided, and in turn, the other market participant provides you the money. This is what is called as market repo. Now, what is tri-party repo? Tri-party repo is also almost same as market repo, but there are 3 parties involved. Okay, in case of market repo, there is only a borrower and a lender. The lender provides the money, the borrower provides the collateral. This is how it works. But in case of tri-party, there are 3 parties: borrower, lender, and there is also a person called who does the settlement. Generally in India, who does it is the Clearing Corporation of India. Okay, so this is a middle person to ensure that the settlement takes place. What if the borrower pays the money but the lender does not provide the collateral back, right? So there is a settlement risk involved, right? So that settlement risk will be taken care by the clearing corporation. The clearing corporation will ensure that everything is settled properly. No one defaults. That is what is called as a tri-party repo. Okay, this is the difference between market repo and tri-party repo, and this timing has also been increased, and the interbank call money market has also been increased. Remember this, very important.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our Careers Cloud to access this course. Once you have logged into our app, you can go and click this All Courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the Details tab, you will be able to see a brief about this course. And under the Part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the Free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about co-branded credit card partnership. So here, the Pune-based Bank of Maharashtra has partnered with SBI Cards and Payment Services, which headquarters is in Gurugram. Okay, so together they have launched a co-branded credit card. So here, if you see, this credit card will offer various benefits to the Bank of Maharashtra customers. The main purpose for the cards to go in partnership with the banks is mainly to access that huge customer base. So here, if you see the SBI Cards and Payment, they can sell their cards to the huge customer base of the Bank of Maharashtra. That is the main reason behind whatever partnership is. Okay. So here, if you see the various benefits that can be offered to the Bank of Maharashtra customers are reward points on purchases, then cashback offer, then exclusive merchant discounts. So these are the various offers offered by the SBI Cards to the Bank of Maharashtra customers. Next, if you see the Abu Dhabi based, okay, the Abu Dhabi based First Abu Dhabi Bank. Remember, Abu Dhabi based First Abu Dhabi Bank, the largest bank in the UAE, it has launched eMACH.ai. Okay, eMACH.ai platform. It is developed by one of its business unit only. That is called as the Intellect Global Consumer Banking. Okay, so the Chennai based business unit Intellect Global Consumer Banking, it has developed this eMACH.ai platform. And what is the purpose of this eMACH.ai platform? So mainly, if you see, it is a debt management. Okay, that is the credit. Credit is the main source of income to the banks, right? So it will manage the loans given by the banks. So here it will see, it will try to improve the operational efficiency, and also enhance the customer experience by automating the credit process, so that automatically the credit process takes place, or it takes place in a very lesser time. That is the main purpose of this eMACH.ai platform. Next is that a meeting was held. Okay, in that meeting, if you see, the finance ministers, the RBI, everyone and various government officials, they had met on the meeting on scaling up the unified lending interface. Okay, this ULI, it is a digital public infrastructure. Okay, on developing this, on scaling up this unified lending interface, the meeting was held, and the meeting was co-chaired by Shri M. Nagaraju. He is the Secretary of Department of Financial Services, along with the Deputy Governor of RBI, T. Ravishankar. Apart from the Secretary and the Deputy Governor, few other government officials from the central government, state government, Reserve Bank of India, Reserve Bank of Innovation Hub. Okay, remember this unified lending interface, it was developed by this RBIH. Okay, remember who developed this? RBIH. Okay, so now what is this ULI? Okay, this ULI, if you see, it is a platform. Okay, this platform enables the scheduled commercial bank, NBFC, financial institutions and all to access various customers' data, okay, from trusted source. It is not that you can access the data from some non-trusted source, from trusted source like the central government server or the state government server. Okay, so from them, obviously the central government data and the state government data and all is going to be a trusted data, right? So you can access the customer's data, okay, and that too only with consent. So the customer has to provide the consent, only then you will be able to access the customer's data. Like what data can be accessed? Like the GST data, the land records. Say suppose there is a farmer who is approaching a bank to get a loan. Okay, he has some 3 or 5 acres of land, but supposedly he is not able to immediately produce the papers to you. So if you want, you can cross check, okay, whether that, because all the land record data will be with the state government, right? So you can directly access the land records and the ownership data, and you can check. So even without the papers of it, you can check this. Okay, so this will make the process even more easier, faster, accurate and even authentic, because all these data are from authentic servers only, authentic database only. Similarly, milk boring data, satellite imagery data, customers financial data, PAN verification, eKYC. So all these kind of data can be accessed by the banks and the financial institution through this platform. Okay, so remember, mainly this ULI will help the credit market to grow, because all this, when you are able to access all this data online itself, okay, we can access it in within few minutes, right? So you can have all the data of the customer within few minutes. So when you have all the data, the processing of the loan will also be lesser. That is, the time taken to process the loan will also be lesser. So this will help the credit market in India to grow. And this ULI, it plays a very vital role for the MSMEs. So if you see, the MSMEs, they play a very vital role in our country, right? So they contribute 30% of the India's GDP. But still, though they contribute this much, they still get very lesser loans compared to the corporates. Okay, the corporates, they have easy access to the loans provided by the financial institution. But MSMEs, they face delays, rejections due to a lack of collateral and complex documentation. So if you see, there was a report released by the SIDBI, in which it stated that India's MSME, they face a credit shortfall of nearly 30 lakh crore. So this is a huge shortfall, right? So this ULI, when you scale up, this will be very useful for the MSME. So at the end of this meeting, if you see, 4 resolutions were taken. Okay, so the 4 resolutions were: first one, digitally integrate high value government data sets from the central and the state ministries with the ULI. Okay, the high value, very important government data sets should be integrated with the ULI. Next, nominate nodal officers from all stakeholders to coordinate and fast track data integration with the ULI. So this should happen in an authenticated way, in a safe and a secure and a faster way also, because it shouldn't take very long time, right? So all the data that has to be integrated with the ULI, it should take place in a faster way. So for that, you have to nominate the nodal officers who will take care of that work. Next, state governments to prioritize digitization and linkage of land and other key records with the ULI. This is the state government work. Next is align existing lending initiatives to create a unified credit delivery ecosystem with the ULI as the central platform. So there are, apart from this, if you see, ULI is nothing but a credit initiative only, right? Credit lending initiative. So apart from this ULI, there are also various other credit lending initiatives taken by the RBI or the banks. So all the credit lending initiatives should be, okay, should be attached or should be aligned with this ULI. So this ULI will be the central platform, and all other initiatives, all other credit related initiatives should be aligned with this ULI. So these are the 4 resolutions that were taken at the end of the meeting. Remember the 4 resolutions, remember what is ULI. Okay, this is very, very important when it comes to descriptive paper. So if they ask you anything about digital public infrastructure, okay, the digital public infrastructure of the country, what are the digital public infrastructure, why is it so important, then ULI is a very good example that you can state, and you can also mention these 4 resolutions. Okay, so please remember the heading, that is more than enough. The next is about the GDP projection. So here if you see the New York based S&P global ratings, they had projected the GDP. So in that if you see, they had recently released the economic outlook, and in that they have projected that the GDP of India will grow at 6.5% for financial 26. Okay, this rating is for financial 26, 6.5%. This is little higher than the previous projection. Previous projection they had projected only 6.3%, and now they have projected a little higher, that is 6.5%. The reason for this is lower crude oil prices, monetary easing. We have seen, right, the RBI has reduced the repo rate by almost 100 basis points, okay, cumulatively. So here then income tax concession also was there, and normal monsoon. So due to these reasons, the GDP projection has improved for the financial 26. Similarly, if you see for the financial 27 also, the GDP projection has improved, that is to 6.7%. Obviously, you don't have to remember the previous projection. You have to remember only the latest one, that is 6.5% and 6.7%. Remember this, please remember it, very, very important. Similarly, the inflation projected, if you see, the S&P had projected that the inflation in 2025 for India, it will be around 4%, which is acceptable and which is also the RBI's target. Next is about a program that has been launched by the World Bank. So here if you see, the World Bank has launched Karnataka Water Security and Resilience Program. Okay, Karnataka Water Security and Resilience Program, and for this program an amount of $426 million has been allocated. So mainly what this purpose is to treat the recycled water properly, the wastewater properly, construction of sewages. So for this only this program has been launched for this purpose. Okay, so who will give this loan? So this loan will be given by the International Bank of Reconstruction and Development, which is one of the arm of the World Bank. Okay, so here IBRD only will be providing this loan. Okay, this is, remember, Washington DC. Okay, this is the headquarter of World Bank. So here the IBRD will provide the loan $426 million, and the tenure of the loan, if you see, 20 years, but a grace period is being provided, that is 5 years. So let us look into the program details. So here if you see that $426 million, where will that money put into use? So it will be used to construct 9 sewage water treatment plants, and also provide sewage connections to 1 lakh households. And also if you see, it will also, the World Bank will also collaborate with the Karnataka State Natural Disaster Monitoring Center. That is Karnataka State Natural Disaster Monitoring Center. Why? To strengthen the early warning system for extreme weather events. So if at all any flood is happening, it is going to happen, then it is better to issue early warnings to the cities, right, so that people will not be that much affected. So for that purpose, this collaboration is done. Okay. Next, if you see, it is about the Tamil Nadu Women Employment Welfare. Okay, for the Women Employment Welfare and Safety Program, the World Bank has provided $150 million. Okay, for Tamil Nadu Women Employment, $150 million has been provided by the World Bank. So here if you see, this will be used to enhance access to quality employment. So quality employment will be provided to 1.6 million women. And also if you see, how will they boost the female labor participation? By providing more crèche facilities, elderly care, more option for safe transport will be provided, and also hotline call centers to report harassment cases. So all this will be provided under this program. Remember the amount, World Bank will be providing $150 million, and for what? For the Tamil Nadu Women Employment and Safety Program. So here if you see, the tenure of the loan is 25 years and a grace period of 5 years is being provided. So this will help around 6 lakh women receive skill training and also career support, and also 18,000 women entrepreneurs will receive the incubation support to set up their business. Okay, so these many people will get benefited from this program. Main thing you have to remember, the amount and who has provided and to which state, and also the purpose also. Next is RazorpayX. Okay, this is the banking arm of the RazorPay. Okay, Okay, RazorPay, you know, it's a fintech company. So this is the RazorpayX. It is the banking arm of this RazorPay. It has launched a RazorpayX corporate credit card. Okay, remember, it has launched RazorpayX corporate card. Now, what is this? So this has been launched first. This has been launched in partnership with the Mastercard, RBL, and Yes Bank. Remember, RMRY. Okay, RazorPay corporate credit card, Mastercard, RBL, Yes Bank. Okay, in partnership with these people, this card has been launched. This is mainly launched to provide loan service to the startups, because it is a startups. Around 95% startups in India, they are struggling to get loan from the institutions, from the financial institutions. They are struggling to get the loan. See, this is to address the $530 billion credit gap in India. So where the 95% of the startups struggle to get institutional loans from the institutional credits. So basically, startups, they are just starting up, right? So it's very difficult for the institutions to trust them and provide loans. So that is why it is very difficult for them to get loan, and this corporate credit card will provide loan to them. So if you see how much will be provided, startups can avail credit limits of up to 2 crore without any collateral, easing the financial constraints. And also, if you see, a competitive of 2.5% of foreign exchange fee is provided. So generally, if you see, the foreign exchange fee using other credit cards are a little higher. Here 2.5%, it is significantly lower than the standard industry rates. Here you have to remember this amount, up to 2 crore without collateral will be provided under this credit card. So this HDFC Life Insurance Company, Science Society for Innovation and Entrepreneurship, and IIT Bombay, together they have launched this HDFC Life InsUReka. Okay, what is this? It is an innovative challenge for startups. So there will be certain insurance related problems, life insurance related problems, and this startups that are willing to participate, they have to provide some innovative solutions to address the life insurance related problems. That is the main purpose of this HDFC Life InsUReka. What happens here? If you see, it invites startups across India to create technology driven solutions and address the real world challenges in the life insurance industry. Okay, so the startups with a working prototype and market readiness can apply. So you have to, the startups which are willing to participate in this challenge, they have to have a working prototype. That is, the product should be ready to be launched. Okay, that is what. Okay, they should not just have a paper. They should not just have their idea in the paper. The product should be a working prototype, and it should also be able to be readily launched. Okay, that is the main purpose. That is the main eligibility also. Next, the selected startups will get the opportunity to build proof of concept with the HDFC Life. Proof of concept means whether this is feasible or not, whether it can be fully implemented or not. All this has to be submitted. Okay, and then finalists may explore long-term collaboration opportunities with the HDFC Life. Okay, so here you have to remember the 3 entities that have come together and launched this initiative name. And the initiative is mainly to encourage the startups to participate and give solutions to the life insurance industry problems. That is it. The next news is about the bank assurance. So here, if you see, the Chennai-based Equitas Small Finance Bank, it has partnered with the Mumbai-based Edelweiss Life Insurance Company Limited. The main purpose of any bank insurance is to provide the insurance policies to the customers of the bank. Okay, to make use of the huge customer base of the banks. That is the main purpose of any bank insurance. So here, if you see, the life insurance policies will be provided to the Equitas Small Finance Bank customers. So here, if you see, the customers will have access to the protection plans, saving plans, ULIPs. So all these plans will be explained to the customers of the Equitas Small Finance Bank, and they can buy it from the Edelweiss Life Insurance Company. The next news is India emerged top destination in the global south for green investment. So recently, if you see, the Reserve Bank of India had released the June 2025 bulletin. So every month it releases a bulletin report. So in that, if you see, it has stated that India has been the top destination in the global south. Under what category? Under the Greenfield investments in the digital economy. So this means in creation of any data center from the scratch, any innovation hub, again from the scratch. So all this, if you see, it is a greenfield investment in the digital economy. In that, if you see, we have topped in the global south. Okay, only not in the entire world. In the global south, we have topped it. And if you see, overall, there has been a $114 billion investment between 2020 and 2024 under this greenfield investments. Okay. Next, if you see, for April 2025, the gross FDI, the foreign direct investment, was $8.8 billion, higher than the previous March month and also the previous April 2024 also. most of the money that has entered via this FDI, it has been invested in the manufacturing and business services. Okay, more than 50% of the money has been invested in the manufacturing and the business services. So with respect to outward FDI means people who are residing in India, they invest in business outside India. Okay, that has also been increased. That is, so Indian people have also been investing in the outside world. And repatriation has decreased. Repatriation means the returns. People who have invested their money, they take back their money, right, when they get enough amount of profit or try to exit their position, right. That return has been decreased. So a strong investment plus a reduced in return. So if you see the outward FDI also, the sectors where our Indians have invested were in electricity, water, financial, insurance, gas. So these were the various sectors in which the money was invested. And if you see the destination, okay, in which countries most of the money was invested was in Singapore, Mauritius and Germany. These were the destination where the outward FDI mostly invested their money. And net FDI, if you see, for April 2025, it was 3.9 billion. So from the gross FDI, you minus the outward FDI and the repatriation. Okay, the money that has been taken back by the investors, you subtract all that and you arrive at the net FDI. So the net FDI was 3.9 billion in April 2025. Similarly, foreign portfolio investors, if you see, the net inflow was 1.7 billion in May 2025. The previous case, we saw the FDI details for the April month. Okay, this FDI detail is for the May month. The net inflow for FDI in May 2025 was 1.7 billion.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.